This quarter, you're watching a traditional PC company complete a full identity transformation in the AI era, a small revenue miss, but an EPS explosion, record AI server orders, and full-year AI shipments raised from 20 billion to 25 billion. This earnings report marks the moment Dell officially enters the core circle of AI infrastructure. Hey everyone, this is Deep Dive Stock Earnings. After going through Dell's Q3 earnings, one thing is crystal clear: this company is no longer the Dell we used to know. It's no longer a PC player, it's becoming one of the core suppliers in AI infrastructure. And what makes this even more special is the stock movement before and after the report. You can tell big money started positioning early. I'm going to let Katarina break down every key part, so you can see why the stock jumped the way it did.
Dell reported revenue of $27.01 billion this quarter, a little below expectations, which looks like a small miss on the surface, but the EPS tells a completely different story. Adjusted EPS came in at $2.59, far higher than what the market was expecting. Normally, if revenue pulls back, profitability drops with it, but now we're seeing the opposite, which means the product mix is shifting into higher margin, higher value areas, and the area is AI infrastructure. The ISG division delivered $14.01 billion in revenue, up 24% year-over-year, with operating margin improving to 12.4%. This isn't cheap hardware, this is high-value AI systems. That's why the market completely ignored the revenue miss.
The revenue miss doesn't matter at all. Dell's entire story has moved to AI, and the profit structure is what the market is really paying attention to.
Now we look at the part that really sent Wall Street into overdrive: AI servers. Dell shipped $5.06 billion worth of AI servers in a single quarter. This is not future orders. This is already recognized revenue, and the orders are even crazier. AI server orders hit $12.03 billion in Q3 alone. Full year AI orders have now exceeded $30 billion, creating an AI backlog of $18.04 billion. And here's the wild part: that backlog does not include the huge deal announced in November. What you're seeing is simultaneous strength, strong shipments, even stronger new orders, and an even stronger outlook ahead. Dell is one of Nvidia's most important OEM partners for large AI systems. Any enterprise building AI clusters and not building everything themselves stands to choose Dell, not because Dell is cheaper, but because Dell's value is in engineering, system integration, cooling solutions, and deployment speed.
They're not selling servers, they're selling the architecture rights of the AI era. Every deal is big, complex, and highly profitable.
Now let's look at the stock itself, because Dell's chart this quarter is extremely telling. Before the earnings report, the stock had already pushed higher for 3 straight days with rising volume, which clearly showed that institutional money was positioning ahead of time, betting on a strong AI performance. After the earnings came out, the stock gapped up in after hours, breaking through the top of its previous consolidation zone. And this level matters, though had been stuck under this ceiling for almost 2 quarters. This earnings report was the catalyst that finally blew that ceiling open. The price structure changed. The movement no longer looks like a traditional PC cyclical stock. It looks like an AI infrastructure momentum stock sensitive to news, accelerating in slope, with shallow pullbacks and strong rebounds. As long as it holds this breakout zone, the trend is entering a new expansion phase, and the fuel for that expansion is simple: the AI shipments Dell will deliver over the next few quarters. In short, the fundamentals and the stock trend are strengthening at the same time.
The chart is telling you the exact same story that earnings told you. Dell isn't Dell anymore. Money flow, trend, and fundamentals are all pointing in the same AI direction.
Dell's AI growth is not coming from the hyperscalers Amazon, Google, and Microsoft, because those giants build their own systems. Dell's explosive growth is coming from large enterprises, governments, and a group known as Neoclouds players like CoreWeave that build specialized AI clouds for these clients. Dell's value is fast delivery, plus custom engineering, plus system integration, plus global service, and that means Dell is capturing the highest margin, high stickiness segment of the AI market. Traditional storage revenue this quarter was $4 billion, down 1%, but it was completely overshadowed by the 37% surge In AI-driven servers, ISG is not a good performer as is the part of Dell that is being fully reshaped by the AI era.
This isn't about fighting the giants. It's about owning the most profitable market outside the giants, and it's working brilliantly.
The part that truly shocked the market was Q4 guidance. Dell guided next quarter's revenue to $31.05 billion, almost $4 billion. Above Wall Street expectations, that implies 32% year-over-year growth. A company only gives guidance like this when orders are fully locked in, supply chain is confirmed, and delivery schedules are solid. EPS guidance was also raised, and the full-year AI shipment target was raised from $20 billion to $25 billion. Longer term, Dell laid out a framework through FY 2030, 79% revenue growth and over 15% annual EPS growth. The company also returned $1.06 billion to shareholders in Q3 through buybacks and dividing, something only companies with strong visibility dare to do.
If everything had to be summed up in one line, it would be this. This quarter didn't show you earnings, it showed you a transformation. Dell has fully stepped out of the traditional PC category and stepped into the core of AI infrastructure. AI orders, AI shipments, AI backlog, AI guidance seals showing explosive acceleration. The stock and the fundamentals are now moving upward together. This is Deep Dive Stock Earnings. See you in the next episode.